Hey everyone, welcome back to Corporate Decoder, the place where we untangle corporate filings so you don't have to. Today we're diving into a Schedule 14A filing, which is basically a fancy proxy statement. It's like the company's report card telling you what they plan to do at the next shareholder meeting. Get ready for a peek behind the boardroom doors. It might just give you the giggles or maybe you'll cry. Let's find out. The big picture is Service Corporation International, the death care giant, is asking shareholders to re-elect its directors and approve its executive pay. There's also a new director nominee on the table and a long-serving director is stepping down. Let's dig in. First up, let's get some context. This is a definitive proxy statement, meaning the company already sent this information out to shareholders. The meeting is about voting rights, not just chit-chat. Service Corporation International, that's the name of the game today. That's the registrant's name. In case you were wondering, the company we will be talking about today. Okay, they're starting with some highlights from 2024. It's basically a victory lap around their performance. They say they are delivering shareholder value as every company does. For starters, revenue is at $4.2 billion and they had a gross profit percentage of 52.3% pre-need sales production. And I quote, because I like this phrase, came in at $26 billion. What does this mean? Basically, they are killing it, literally and figuratively. More seriously, these pre-need sales are a great indicator of future revenue. Next up, capital allocation, and again, that's capital investment and growth opportunities. They invested $181 million and got back $428 million to shareholders. That number is very important. The shareholders are the owners, so this value is really important. That included share repurchases too. Finally, the total liquidity, so readily available cash, is $1.2 billion. Always good to have some readily available cash is $1.2 billion. Always good to have some readily available cash is $1.2 billion. Always good to have some readily available cash is $1.2 billion. Always good to have some readily available cash is $1.2 billion. Always good to have some readily available cash is $1.2 billion. Always good to have some readily available cash is $1.2 billion. And to conclude, C says their total shareholder return is 316% over the last 10 years. The S&P 500, only 243%, always good to beat the S&P 500. Moving on to the board, there's a changing of the guard. Our director is stepping down, Blair Waltrip, who's been with the company for 38 years. A new director nominee named Thad Hill is being nominated. Here they are, the nominees for the board of directors. Let's just take a quick look at who's in the running. It's a mix of people with experience in banking, politics, investment management, and even NASA. A really interesting group. Now the new guy, Thad Hill, is the executive chairman of Calpine. Calpine is a power company, so that will be an interesting shift to the board. He would be considered independent. This is an important change in the board since he would bring an expertise on energy to SCI. And here we see the lead independent director, Marcus A. Watts. He's president of the Friedkin Group, which sounds like some mob-run organization, but it's really just a company that includes cars, hospitality, and entertainment, so don't worry. Okay, the director nominees possess a diverse mix of backgrounds, experience, and expertise from financial all the way to the industry with risk management as well. They've been talking to shareholders representing a big chunk of the company's common stock, trying to get their feedback. A really important note, in 2023 they added Proxy access, which lets shareholders nominate their own candidates for the board. They updated the corporate governance guidelines to limit how many public company boards their directors can serve on. Always good to have a good work-life balance on your board. Now, on to ESG, environmental, social, and governance issues. These topics include associate well-being and supporting the communities. Since 2020, they've been having the Nominating and Corporate Governance Committee, or NCGC, overseeing these issues. See, even death care needs corporate oversight. The oversight is performed by NCGC. SCI Sustainability Report, which goes into more detail, is published on their website. Time to talk about the auditor. The board recommends voting for PricewaterhouseCoopers LLP to continue as their independent accounting firm. They've been doing the job since 1993. Basically, SCI recommends keep it as it is. They seem happy with their performance. Check it out. Audit fees came in at $7.2 million out of a total $7.5 million of total audit fees. It shows the audit-related costs are a heavy part of the fees. Now let's get into the juicy stuff, executive compensation. The board recommends voting for the compensation package for their top executives. They say it aligns with company performance. Digging into how they get paid, there is salary, of course, and there are performance-based incentives. Now, let's see what kind of long-term incentives these guys have. Stock options, good for them. Restricted stock as well, and of course they participate in the performance-based units that is measured by the total shareholder return compared to the S&P Midcap 400 index, so pretty standard for a corporation. There's a graph aligning CEO pay and performance using the 5-year total shareholder return. The company realized total shareholder return of 88% over the last 5 fiscal years. Looking at the other NEOs, most of their money comes from long-term incentive compensation as well. The pie chart shows about 53% for the NEOs comes from long-term incentive compensation, meaning that their decisions have to align with long-term performance. A lot of their compensation comes from financial performance. There is even a customer satisfaction component tied to Google reviews. So they claim if customers are not satisfied, they are not getting paid. Moving into the specifics of the director elections, each of the nominees have a short little bio if you want to dig into each one. Some highlights: Alan Buckwalter brings corporate finance experience. Tony Kosler brings investment experience. I won't go through every name, but there is a bunch of important information here. Victor Lund is the oldest at 77. He brings knowledge about technology, having served as CEO of a tech company, Teradata. Ellen Ochoa, on the other hand, the young blood in the crew, brings government and technology insight. It looks like all the executives are overperforming their stock ownership goals. They exceeded the ownership guideline levels for 2025. Good to see management aligning with the shareholders' success. The audit committee keeps an eye on things like financial statements, the performance of the auditors, and internal controls, even including cybersecurity. The compensation committee handles executive pay and makes sure the programs aren't too risky. The investment committee looks over the trust funds, and the nominating and corporate governance committee is all about board composition and ESG. So social responsibility. One last thing, the lead independent director leads what is called the executive session. These meetings happen at the end of every regularly scheduled board meeting. It's a meeting attended only by non-management directors and without management present. It is basically a meeting to give feedback about management without them being in the room. Finally, for all those reports, SCI believes that all the reports for transactions occurring were filed timely. There was only one exception, the report representing the sale of 8,061.17 shares. I should note that adjusted earnings per share and adjusted operating cash flow are non-GAAP financial measures, meaning they aren't calculated exactly as the government requires. And lastly, Annex B has the peer comparator group. It has a long list of companies, too long to list here, and is used to benchmark the compensation of the executives. So what's the takeaway? SC seems to be sailing along smoothly, delivering consistent results and keeping shareholders happy. The board seems engaged and is refreshing its ranks with new perspectives while still valuing experience. They seem to be on the right track. From an investment point of view, as far as I'm concerned, the main risk lies in the difficulty of the business. You really have to consider how the markets will move and how people will react. Will they do more cremation or traditional burials in the future? That will influence a lot of things. But the company has an excellent brand image, a strong balance sheet, a high quality board, and an industry position with a huge amount of consolidation over the next decade. With all these positives, along with the risks, Service Corporation International seems to have a positive outlook, at least as far as this proxy statement shows. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please hit that like button, leave a comment and subscribe for more deep dives into the world of corporate filings. Until next time.